Hi everyone, this is Mrs. V. Chen. Welcome to my Form 5 Accounting Lesson number 15. Today is 6 April 2020. Today's topic is about limited company. Okay, so to begin with, we have this, ways for financing. And there are two ways for a limited company to do financing. So what is meaning of financing? Financing means how to get money for the limited company. Okay, as there are two ways. The first one, a limited company can issue shares to the public, and also a limited company can issue debentures to the public. Okay, so here is the double entry for a limited company after issuing shares. So to issue shares is one of the ways for financing, and financing means to get money. So this is the way for a limited company to get money by issuing shares. So therefore, debits bank means we have more money in the bank accounts after issuing shares. And then credits share capital. Okay, so you can see this double entry is very similar for the money introduced by the owner, but now for limited company, you have the word here, share capital, instead of just capital. Okay, and to a limited company, there are two kinds of share capital. One is ordinary share capital, one is preference share capital. All right, so for preference share capital, we always have this percentage in front of that. Okay, after issuing shares to the shareholders, the company has to pay dividend to shareholders as a kind of incentive for the shareholders to buy shares of your company. And here is the double entry. So we debit profit and loss appropriation account. So similarly to a partnership, limited company also has profit and loss appropriation accounts. And now since the company has to pay, so that credits bank to shareholders means people who buy shares of your company can earn dividend. Now we come to the difference between ordinary share capital and preference share capital. So if you are the one who buy ordinary shares, that means you are ordinary shareholders. And if you buy preference shares, that means you are preference shareholders. Okay, so the first difference is ordinary shareholders, they will have voting rights at the general meeting. But for preference shareholders, they do not have any voting rights. So you have no say at general meeting with the directors of the limited company. Okay, so the next difference between preference share capital and ordinary share capital. So preference means we receive dividend first. So that's the meaning of preference, okay, before the ordinary shareholders. And here, so ordinary shareholders will receive dividend later than preference shareholder. And also preference shareholder will earn dividend which is fixed. However, for ordinary shareholders, the dividend earned is not fixed. So that's why we always have the percentage that comes before preference share capital, and this 5% means the dividend that the firm has to pay to the shareholders, and which is fixed at 5% in this example. Okay, now look at the accounting equation. So we always have assets equal to capital plus liability. However, to a limited company, we change the name of capital to equity, EQUITY. So therefore, here I have the statement of financial position for a limited company. The first half, exactly same as before, non-current assets. This is total current assets, so we have total assets here. However, for the second half, all right, so we don't call it capital, we change capital to equity. All right, so this is equity as well. And then we have two kinds of share capital. One is ordinary share capital, and one is 5% preference share capital. For example, what is this meaning of 5%? It means the fixed dividend rates that we have to pay to the preference shareholder. And the second half will be total equity and liabilities. So finally, we have the total here, total assets. Okay, it must be the same as total equity and liabilities. Now we come to the second way for financing to obtain money, which is by issuing debentures to the public. So here, double entry. The purpose is to get more money, therefore we debit bank and then we credit 6% debentures. Again, we always have this percentage in front of the debentures. I will explain to you soon. So anyway, what is debentures? Debentures is a kind of non-current liability in the statements of financial position. Okay, so therefore, if you look at this statement of financial position, you will find 6% debentures in the statement of financial position as a kind of non-current liability. Okay, so after issuing debentures to the public, the company has to pay interests to the debenture holders. And here is the double entry. So we debit interest on debentures in the profit and loss account. So in the income statement, so you can see this interest is a kind of normal expenses. And now the firm has to pay, so we credit bank. And sometimes the firm pay later, so we will have accrued interest on debentures, and this is the kind of current liability. And one more thing, the interest pay must be fixed. So therefore, this is the percentage for saying that the interest is fixed. Okay, so here we come to the income statements of a limited company. However, this is for internal use. Okay, so the first part, we have the trading accounts to calculate gross profit. So here is gross profits, and then we add revenue to gross profits and minus expenses. And one of the example for expenses is interest on debentures. Okay, and after that, we have net profits. So since limited company has to pay tax to the government, so therefore we have this net profit before tax. And after minus taxation, we have this net profit after tax. Okay, so the second part is the profit and loss accounts. And also we have the extra parts, we call that profit and loss appropriation accounts. So after this net profit after tax, we minus appropriation. So for this part, we call this profit and loss appropriation accounts. All right, and then we have transfer to reserve and dividend, so that we get this retained profit for the year and add retained profits, and then we have retained profit carry forwards. And then these retained profits carry forward actually will be the opening retained profits in the next year. And also this retained profit carry forward will be shown in the statement of financial position. So this is the statement of financial position for equity. So we also have retained profit. So this figure retained profit actually. So this retained profits in the statement of financial position, okay, which is same as the final thing for retained profits carry forward. Okay, so after income statements for internal use, now we have the income statements for external use, because all public limited company, they have to disclose their financial statements to the public. So here is the format. So the first part is trading accounts, so which is same. So we get gross profits from the trading accounts. And after that, we add revenue, and then we have expenses. However, for disclosure, this is the format. We group and classify all expenses into these three categories. So therefore, we have administrative expenses, we have this selling and distribution expenses, and then we have this finance costs. And one of the example for finance costs, okay, so will be interests on debentures like that, okay? And therefore we have net profits, and then double line here means this is the final answer, okay, in the income statements for external use. Okay, all right. However, this net profit in the income statement for external use, okay, should not be the figure here, retained profits, and which is one of the equity in the statement of financial position. So therefore, to get this retained profits, we need to show workings. And here is the workings for showing profit and loss appropriation accounts. So therefore, for this final answer, retained profit carry forward, this one will be exactly same as the figure in the statement of financial position as part of the equity. Okay, so the company may need money for future use. For example, if the company wants to expand the business, or the company wants to take over another business, or to spend money on research and developments. So therefore, in this situation, the company will pay less dividend by creating more reserve here. So credit general reserve, so that to debit profit and loss appropriation account, so that to pay less dividend to the shareholders in order to save up more money. And for the general reserve created, so this general reserve will be parts of the equity here. All right, so therefore here, this is the general reserve being created for future use. Okay, so after transferring to reserve, and then here in the profit and loss appropriation account, we also have this dividend. So the limited company has to pay dividend to the shareholders, and this dividend will be in the profit and loss appropriation account. So therefore, if you go back to the previous slide, for example, so the company needs to pay dividend to shareholders after issuing shares. So that's why we have this double entry saying that debit profit and loss appropriation account, and then now needs to pay money to shareholders for dividend. So, and this debit profit and loss appropriation account actually is exactly same as the dividend to be deducted from the net profit earned by the limited company. Okay, and also the retained profit carry forward, this figure will be the final answer as part of the equity retained profit here. Okay, and also this retained profit carry forward will be next year's opening retained profit. Okay, and also the retained profit carry forward, this figure will be the final answer as part of the equity retained profit here. Okay, and also this retained profit carry forward will be next year's opening retained profit. Okay, so finally, for DSE questions, so when we have to draw income statements for a limited company, we should always follow this format, which is for external use. Okay, so we do this classification for expenses, and then we stop here for net profits. Okay, and then we show this profit and loss appropriation accounts as part of the workings. All right, and finally, here is the statement of financial position. The first half exactly same as before. However, we change capital to equity, and we have four things for equity, which are ordinary share capital, preference share capital, general reserve, and retained profits. And also, what is debenture? Debenture is a kind of non-current liabilities to the limited company. And also, we have another name for equity. We call that shareholders fund. All right, so that's about all the introduction for limited company. So thank you for watching my video. I'll see you next time. Bye bye.